Hi, this is George. In this video, we are going to see about ratio spread in Banknifty. Before getting into the video, please do subscribe to this channel. Also join our Telegram channel for instant updates. And also please do like the video if you genuinely like it. Let's get into the video. So this is again another interesting strategy in option selling. This strategy is going to have an unlimited loss. So if you are like kind of conservative trader, then better you skip this video or skip this strategy. But for at least understanding purpose, you can watch this. But this is unlimited loss strategy. But in the last 4 months, whatever I have tested, or even in some other peculiar cases like Ukraine Russia war time, also have tested that. In those cases, it has not given very big loss. So you can at least understand the strategy, and then whether you want to use it, it is totally up to you. So it is kind of risky strategy, and you can see the capital record also a little high because it is like a, when I say unlimited loss strategy, then as we are option seller, it is not a protected one, not a hedged one. So obviously there is going to be a naked leg, and that is the reason we are having a capital requirement little higher than usually. So it is like 1.8 lakhs is the margin required. And also coming to ratio spread in Banknifty, we have already seen ratio spread in Banknifty in my channel, but this is going to be little different from what we have seen before, and this has given very big return than what we have seen in the past one. So let's get into this. So in this video, I have given manual backtesting for the last 17 weeks in Banknifty weekly options. And here again, absolutely no adjustments required. So it is very much suitable for working professionals and part-time traders. Disclaimer, this is only for educational purpose. Please do your research before taking any trade. This is not a recommendation, but just my view. So let's get into the core. So entry, when are we entering? Just like our every other videos, we are going to enter this on the previous week expiry at 9:30 a.m. and we'll be exiting on the expiry day at 9:30 a.m. So what is the strategy? We are going to buy one lot of ATM call and put, and we are going to sell 2 lots of OTM call and put. So this OTM call and put, when I say what is the OTM call, like how much far from the ATM or how much far from the spot we are going to sell, is something that we are going to decide based on the premium and not just between the strike difference. Like say we'll go like we'll buy ATM call and we'll sell 500 points away OTM. It's not that way. It is going to be ATM call we are buying, and we are going to sell 2 lot OTM, and I'll just show you with the payoff chart like how we are going to decide which is the OTM call and put that we are going to sell. So for example, in this case, say suppose we are Banknifty is at 38,000, we'll be buying 1 lot of 38,000 call and put, and we'll be selling 2 lots of 37,200 put and 38,700 call. You can see like this is 800 points away from this ATM, and this is 700 points away from ATM. So it is like not same between call and put. It can differ. It can even at times it can be like a put can be little less and call can be more, but generally put will be more because put premium will be relatively higher than call premium. So this is the criteria. Now let's get into the summary. So you can see like this is the 17-week summary that I have given. So in this you can see like we have made maximum profit of 10,000 on 9th June. I'll just show you the overall summary. Out of the 17 weeks, 12 weeks we were profitable, and so it comes out to be 71% profitable weeks, and overall profit is like 49,000. So average profit per week is almost 3,000, 2,900 to be exact, and return on investment per month is 7%. Let me take you to the option, give you the like how we have done this strategy. As usual, I'll take the best case scenario first, which is 9th of June. So we are going to enter on 2nd of June for the expiry of 9th of June. So we are going to, sorry, this is a Banknifty one. We are going to buy ATM call. So 35,500 ATM put, first we'll see put. So 35,500 put, we are buying 1 lot. And where we are going to sell this, we are going to sell like you just divide this 480 by 2, which comes around 240, little less than that, not like 233, which is so near, maybe 208. We'll sell 2 lots of 34,700 put. Now if you see, this should be the payoff chart, and this will be like around like maybe 1800 to 1500 or 2000 rupees should be the minimum loss, sorry, maximum loss in this direction. One direction will be obviously unlimited loss because it is a naked selling. The other side, it will be a loss, but it will be a very minimal loss between maybe around 1000, you can say. Maybe it can go till like 800 and maybe till even 2000. So that is the criteria that we are going to see. So in this case, it comes around to be minus 1630. So this is the strike that we are choosing. It is like 800 points away from the ATM. Similarly, in the call side, we will see. So we will be entering on 2nd of June and we are exiting on 9th of June. Here again it is 9th of June. 35,500 was the spot. So 35,500 we'll be buying one lot. 35,500 is 511, which is around 500. So 250, little less than 50, 215 we can see. We'll sell two lots and we'll go and check the payoff chart. Okay, 2000 rupees. This is fine. So this is again, you can see like 700 points away from strike, just like what we saw in the slide. This is exactly matching 800 points and 700 points. So this is the criteria here. Now we will see where the market is going on 9th of June. You can see in the put side we have made profit of 12,388, and in the call side, if one side it is profit, then obviously the next side will be loss. It will be in the minimum loss of 1000. It was 2035 to here it is showing 1995. So that's what I would have given here. So this is the maximum profit we are getting. You can see like maximum profit we got almost here. The market has actually moved towards this 34,730 only. The market is somewhere here. 34,800, 34,700. So still we have made the maximum profit because the break even here is like 35,434. So the break even is a little far away, and we have like exactly 34,700 is what we sold, and it is almost in the same range. So we are making the maximum profit here. This is the best case scenario. Let's also see the worst case scenario here, which has happened in the very recent week, which is 28th July. Let's go to 28th July. So for 28th July, we would have entered on 21st July. So ATM put will be selling 36,000. So 36,000 we will be selling, sorry, buying. Now 370 is the premium. 370 you can consider as maybe 380. So 190, little less than 190. We'll just check whether this is meeting our criteria. 169. Okay, 780. We can take this. This is 600 points only away from the ATM. Similarly, here you have to see 21st of July and 28th of July. And here it is again 28th of July. Now we will see 36,000. We will be buying one lot. It is 400 rupees, so around 200, little less than 200, 184 maybe. I don't think 184 is going to satisfy. Maybe we will see. Okay, 876, it is satisfying. Now this again is like only 500 points away, and this is only 86. This is only 600 points away. Last we saw like it was 800 and 700 points away from strike, but here it is only like 400 and 500. 500 and 600. You can see the premium difference also, like when we saw in the last case it was somewhere around 480 or something, and in this it was like 500 something, but here you can see only 403 and 369. So the premium is very less here. We'll see where it is going to end and how much we are going to lose or make money. We know this is worst case, so it is going to be a losing side. You can see this side it is 803 we are losing, and call side we are going to lose 6,700. So that's what I would have given here. One side 6,700, other side 1,900. So we are losing 8,000. somewhere around 8,000. So you can see like the reason is this side market has moved violently, like 36,000 is what we did and it has went to 36,500. This side anyway it's going to be wherever it goes the loss will be the same. So now in this case what we need to understand is like as because we are selling little near to the ATM than the last time, if suppose market moves violently like 1,000 or 1,500 points, which it can happen usually, then we will be ending up in a loss. Last thing when we saw, see, we have very good buffer only because we had like we entered ATM was 36,000. Here is like buffer was like 1,000. Last time we saw like buffer was somewhere around 1,500 or so. So 1,500 buffer is very good thing, at least for now, the manual testing that we saw out of the 17 weeks. So that is a good one. But here when it is like only 1,000 and market has moved 37,200, which is like 1,200 points, we are facing a loss. So you can see that we have made a loss of around 8,600. So in this case, though there is like a market has moved like maybe 1,500 points, the last 17 weeks, whatever I have seen, you can see like out of 17 weeks, 12 weeks we were in profit. Main reason was like most of the cases, the VIX was high. You can see this is the again monthly ROI that I have given. April month it was like again profit of 10%, May 6%, June was a tremendous month of 19% profit. July was the only month which we had in loss of around 8%. You know that April, May, June the VIX were high comparing to July. July the VIX fell down, and that is the reason we saw like we collected very less premium. It's not collecting, we are buying, but still we are collecting also in the sell side also we had very little premium. That was one of the major reason that we had ended up in loss. So those still we have made loss in July. For the last 4 months, if you see, it's a very good return on investment, and we close it by the morning so that we can do concentrate on expiry trades. Now we can do this strategy as I said, right? When we exist more and we collect more premium. Now to confirm this, I just thought like maybe if market is going to fall very high, let's see like what it will happen to our portfolio, whether it will bleed so much or not. So I thought like February and the Russia Ukraine time when comes, that is the one I'm taking as benchmark for the worst case scenario in almost all the videos, because that is when market has moved so much, and as we are like non-directional traders, that should give us some idea on whether our trade is going to perform or not. So for our strategy, we'll just go to the month of February. February 24th was the day the Russian-Ukraine problem came. So we would have entered on 17th of February, and we would have been leaving on 24th of February. Let's just set up this. So you can see like VIX was already high in that 17th of February, though there were no news on Russian-Ukraine war and all at that point of time. So 37,900 is the ATM here. 37,900. We can see like as VIX is more, we're getting 614 premium. So almost less than 300 we have to sell. So 289 where it is available. 2 lots we will sell. Okay, this is fine. Similarly 37,900 we have to. We'll just go to February month. $37,900 will buy. You can see like call is 500 plus, so less than 250 will sell. 233, 2 lots. Okay, so now we'll see what happens on 24th. You can see like from 37,900 already 700 points movement, 800 point movement. Again it recovered so much, and it is like 37,700, only 200 points from what we bought. Now on the 24th, from 37,700 to 36,300, 1,400 points move. Still it is like 1,600 point move from what we saw, and we have a range of 3,600. So still we had a like 1,800 point buffer it was there. So you can see like we had made a profit of 4,100. Initially I thought like we would have made a loss, but surprisingly this was a ended up in profit, which I really didn't expect. You can see like this side it will be like definitely loss and one side is profit, but still I expected it to be a very big loss on this side. I thought the break even would have breached and would have went to loss making zone. But even on the 24th of February, though I have not included in the summary slide, I just checked this, and the following week, the both the weeks are in very good profit. Like not very good profit, but this week was in like a decent profit. The next week you can see March 3rd ending week, that was in a very good profit. If you want, I can just take you there as well, so that you can get little more confidence on how this strategy is working. Because initially I was little skeptical, and I even said in the video that if you are like really conservative, don't take this trade. But you can see that even when it is going wrong of your view, if market is trending also, you are making money. Now this is the time when VIX has really shooted much more than what it was previous month. Now 36,400, you see it is already 700 rupees premium. So we are going to buy one lot, and around 350 we will be selling. So 327, two lots, let's sell. Okay. Similarly in this side, 36,400. Again, this is 750. So consider the 740 means 370. I'm not sure whether this is going to give, or else we'll see the next strike. Okay, this is fine. So we'll just move around. See, you have made 16,000 profit. If you are making profit on one side, the other side will be obviously lost. But still, you can see like even at that peak of time, if you had held this and if you are okay to trade this, you would have got very good money. So this is what I was about to trying to say to you, that even in those scenarios we had made profit here, because the range would have been very much more here. So you can see like range was 2,300. So you have a very big buffer when VIX is more. So you can use this trade when you're having, the VIX is more, you can use this trade. And also like one more thing, like if you are like you don't want to take this much of risk, then maybe you can always buy a hedge, maybe like 2,000 point or 1,500 point. If you have a buffer of 1,500, maybe the 2,000 point you can buy one lot of hedging. In that case, in that way you can like minimize the max loss here, and maybe you can thereby you will be losing little money for buying both the side hedges, but still you will be protected in a way. So you can even use that way. Maybe like overall percentage ROI might go down by 1 or 2%, but if that really doesn't matter if you are protected, so you can even try that as well. But in this strategy, what I saw is like this is working well for the last at least 3-4 months. 4 months for sure, and even in the February month, which was very panicking month. So this is what I was trying to say from this video. In the next video we will see some other interesting strategy. Thank you.